What is going on, guys? It's Thomas here, and today we will be discussing real estate investment trust and how they could be a good option for you to enter into the property market. So a real estate investment trust, or a REIT, is a company which own a portfolio of real estate assets that are income generating. So typically REITs specialise in a specific area of the property market. So whether it be your typical residential property, commercial, industrial, or even the hotel sector. So REITs work like any other share you'd buy on an exchange. So you're basically buying a portion of a company which are investing into real estate on your behalf. And you can basically profit from REITs in two separate ways. The first being capital appreciation. So if the properties within the portfolio increase in value, then obviously your share price and the REIT will increase in value as well. And secondly is through the income made by the REIT. So through the rent paid from the investment assets, you'll be paid a portion of this in basically in like a dividend as well. So the major benefits of owning REITs is the fact that there is a low threshold for the capital required to purchase a REIT. Most REITs have a minimum investment of $500, which is substantially lower than if you're going to buy out your own property. And the other benefit of a REIT is the fact that they are very liquid. So REITs can be bought and sold very quickly with the click of the button. The other major benefit of REITs is the fact that it could open up paths into different real estate assets that you may not have the opportunity to if you're going out and buying the asset yourself. And most people don't have the money available to go out and buy a hotel or a large factory warehouse, whereas with a REIT, you can obviously have the opportunity to invest your money in those types of assets that you may not have had previously. So there are a few things you must consider if you are looking to purchase a REIT. The first one is doing research and due diligence on the actual company itself. So you must ensure you do understand the company's goals going forward and who the management team is of the REIT to ensure that your money is obviously maintained and looked after properly and to a high standard. And although REITs are a great way to diversify your portfolio, they are very property specific. So each REIT only invests in one specific type of real estate. So that is one thing to consider if you do already own residential real estate or commercial real estate, that they are very property specific. So REITs offer an affordable way to be able to invest into the property market, and I highly recommend to do some research whether they may be an option for you if you do have a low deposit. If you have any questions, please go over to the blog. I've got a bit more detail laid out in there. But thank you so much for tuning in. Enjoy the rest of your day, and I look forward to seeing you next week.